Hey folks, welcome to the CNBC-TV18 live, joining in from your social media channels, Twitter, Facebook. Thanks a lot for being with us. Today the market, at least as of now, has been very quiet through the course of the day. There's been a bit of a negative bias in the market where the Nifty is down about 40 odd points. But if you look at it, it's not such a bad outcome despite the RBI policy coming through. The market has steady state with a bit of a negative bias. As we speak, 18,600 is something that's holding on the index. It's a cut of about 50 odd points, and the Bank Nifty is the one that's a tad bit soft as well, down about 15 odd points. Now, just to put it into perspective, in case you missed out on what happened through the course of the day, the RBI policy came and went, and this time around was a 35 basis points rate hike by the RBI. They've also cut their growth forecast for the full year for FY23. The GDP growth forecast has been cut to 6 from 7% earlier. The inflation forecast, though, has remained unchanged at 6.7% for the full year, and the RBI has made its stance at a withdrawal of accommodation. So the policy stance has been maintained. Now, the Nifty has by and large been range bound between that 18,400 to 18,800 level. Remember, 18,400 on the Nifty is the 20-day moving average. So it's sort of a firm support for the index. The RBI policy is now done and dusted, so the market has moved on. In that context, there are some important cues to watch out for. There is the Fed meeting, the US Fed meeting that takes place on the 14th of December, and over there as well there is a 50 basis points rate hike that is expected. So I guess the market is a bit spooked because of that, but largely you'd have to say it's a very range bound market. In fact, as we speak, the Bank Nifty has now moved into the green. So in a sense, the market has actually recovered from the lows of trade. So let's take a look at a couple of stocks as well. What's holding the market higher today is FMCG and consumption. So HUL, Asian Paints, ITC, Tata Consumer, Nestle are all trending in the green line. In fact, some of these stocks for the week have had a pretty decent run as well. So holding up on the green for consumption. L&T is a stock that has been hitting new highs. In fact, it's a fresh 52-week high this afternoon for L&T. The stock is now up 1.5% and has had a good gain of around 12% this entire year. Axis Bank, Bharti Airtel, ICICI Bank are a couple of other stocks that are holding in the green. On the downside, you have autos that's under pressure. Bajaj Auto, Hero MotoCorp are all down and out, and IT has been a bit on the weaker side. So HCL Tech that's down, something like are all under pressure as well. But you'd have to see at the end of the year, a lot of people, start to take leave. They go on their annual holiday. The flows thin out a little bit, and there is no major trend seen in the market. Remember, this is a market that has had a dream run this year so far compared to most of its peers. So the Nifty is up about 7% in 2022, and now it's just catching its breath a bit around these all-time highs of 18,600. Please keep writing to us. You can, send queries to us as well. We will start taking them very soon. The first question comes to us from Arun Sarkar. Arun, thank you so much for joining in and to our live and giving us your query. Global worries are bringing the stock markets down, he says. Which sectors do you still see gaining? All right, so on that account, it's really sector agnostic, our market. It's not dependent on what's happening globally. Of course, if interest rates continue to rise across the globe, if the US economy heads into a recession, then that could keep a lid on our own market gains for sure. But within our own markets, there are some sectors that are doing very well, whether it's banks, you have the names, autos are seeing a bit of a pickup. So these are sectors perhaps that will continue to do well. Domestic consumption is seeing a recovery. Capital goods, L&T, Siemens, Cummins of the world have been doing quite well. These are pockets perhaps that will continue to see traction. On the downside though, metals, IT stocks have been under pressure. Global facing names have been under pressure. So these are something that perhaps you could avoid. So those are some queries that are coming in. We do have some more, just right now. You can send in your queries in the comment section. We are live on Facebook, we are live on Twitter as well. So keep the questions coming. Just a couple of stocks in the broader market that I'd like to highlight this afternoon. One of them is Central Bank of India. In fact, that entire PSU banking lot has done exceptionally well. And look at it this year. Central Bank is up almost 35% for the year. J&K Bank, IOB, UCO Bank, Bank of India are all up anywhere between 3 to 7 odd for many of these PSU banks. Bank of Maharashtra is another one that's had a very strong run. IDBI Bank is up over 1% as well. So the day clearly belongs to the PSU banks in the broader market. And just trying to get a sense of what is happening in terms of fresh 52-week highs. Despite the market declining this afternoon, there are many stocks that have hit fresh 52-week highs. So there's J&K Bank, Bank of Baroda, UCO Bank, IDBI Bank. They're all at fresh 52-week highs. Apart from that, Dabur is at a fresh 52-week high as well. So don't lose sight of that. Indian Bank is at a fresh 52-week high. And plenty of others really in the broader markets, like something like a Jyoti Laboratories sitting at a fresh 52-week high. So all in all, just to summarize how it's shaped up so far, it's a largely range-bound market with a bit of a negative bias. The big losers this afternoon are some of the auto and metal stocks. So Hindalco, Tata Motors, Tata Steel, Hero MotoCorp are your big losers. And on the side, you have a lot of these consumption names that are doing quite well. The HULs, Asian Paints, ITCs of the world. Please write into us. We're awaiting more comments from you. In fact, we have coming in on the impact of the RBI policy on the FMCG sector, and this is coming in from Snehal Jain. Snehal, thanks a lot for writing into us. Now, there's no real impact on FMCG as such, but remember, this is another rate hike that the RBI has undertaken. In the last 4 policies, the rates have gone up by as high as 190 basis points, which means that in effect there would be some impact perhaps on demand. And growth has also been scaled down by the RBI. So the question really is, as we head into the new year, with rates moving up, with inflation still not under control, with growth slowing down and the global markets having growth concerns and demand concerns, maybe, just maybe, demand could get hit in local markets as well. But that is a largely generic or a sweet statement. For individual stocks, it's more company specific. You have to on their. My call is that if you are looking at individual stocks, look at the earnings, look at the growth that the companies have seen. Don't get swayed by the larger headlines, which is the way the market is moving, etc. It's very different. It's very individual company perspective. Let me give you some examples. ITC has been one of the strongest stocks this year. It's up almost about 56%. It's had a dream run in 2022 after not performing for at least the last 5 years. So there are a lot of stocks that are coming out of large bear markets, and ITC is one of them. A couple of other names that I'd like to mention in terms of big losers this afternoon. We spoke about how on the gaining side you had banks. On the losing end, you have a couple of these names like Bajaj Hindustan, Puravankara. There's something like a Rajshri Sugars, Kalyan Jewelers, Nagarjun Fertilizers, Oberoi Realty. A couple of big losers that we have in trade this afternoon. But thanks a lot for tuning in to this live session. Keep giving us your feedback. We'd love to hear from you. And until we meet again, keep watching CNBC TV 18.